Hi, my name is George Dagnino, and I'm the editor of the Peter Dac Portfolio. What I would like to do with these four slides is to show you that the weakness that we had in Apple is not only being caused by Apple itself, but has been more caused by business cycle forces. It's a different view, but I think you might be interested in it. Let me look at what the market did from 2014. The economy was strong, then it weakened here in this area, and this is when, by the way, earnings also slowed down. Then we had people were talking recessions, but actually it was a growth recession. Then the economy picked up strongly. By the way, this is the way the New York Stock Exchange Index trend is. In the stock market reflected the strength of the economy. Then beginning here, the economy started slowing down in 2018, and the stock market has weakened. I discussed this in other videos as well. What this indicator is saying is picked up the same thing. This is when earnings and the economy slowed down. This is when earnings and the economy picked up strength. And from here on, the economy started weakening again. What I would like you to remember is this dates, 2014-15, and again, the 2018 weakness, beginning in 2018 economic weakness. This chart shows two panels, the panel above and the panel below. The above panel shows the price of Apple with its on a weekly basis with its 20 and 40 week moving average. The yellow line would probably correspond to what we usually is intended the 200-day moving average. But the point is that, as we know, Apple prices went down quite sharply. But what has to be noticed that this the line below in the lower panel shows the relative strength, that is how fast or how slow Apple appreciates relative to the market. A rising line says that Apple is stronger, the price of Apple is stronger than the market. When it declines, the price action is weaker than the market. And this is what has happened since October. So this is bad news. Why? Because in your investment, as I showed in my book, Easy Ways to Beat the Market with ETF and with investing wisely, you want to be in stocks that have a rising relative strength. Stocks that have a declining relative strength are not a good investment. Why is Apple now declining the way it did since last? This is the price of Apple since 2010, and as you notice, since 2010-11 is in a nice moves in a nice channel between and moves quite sharply within this two channel lines. What you should notice is that this decline here, which is similar to this one and to this one, occur during periods where the economy slowed down. When and I showed you the previous overheads when this happened. The point is that technology stocks are strong when the economy is strong. The reason we have a decline in 2015 and the current decline in 2018, possibly into 2019, is because the economy is slowing down. And when the economy slows down, corporations don't invest in big, expensive technology improvement kind of expenditures. They're more cautious. Therefore, the business of technology stocks and in general industrial stocks is not as strong. So my point is that the recent decline of Apple is more caused by the fact that the price of the company of the stock reflects the economic environment and nothing else. Of course, as long as it stays within this trend, it means Apple is doing okay. If it breaks below this trend, then really there is a problem within the corporations. But we'll see when that and if happens. Well, what I try to do is with this presentation is to tie the business cycles, the overall trend of the market, which is driven by earnings, and then also to relate the business cycle strength or weaknesses to the price of an industrial company like Apple. Hopefully you will find it useful. This kind of information really is a summary of what I wrote in this book. This is the basically a very detailed analysis of the business cycle and how it works and how prices move. These two books instead deal with how to derive from this convoluted, quite difficult subject, very simple models for investment purposes. Here I go very much in detail in this book into the relative strength of stocks and how to take advantage of that for investment purposes. Again, thank you for viewing this video. So long.